All right, folks, so here's something that does concern me a little bit, and this is not designed to be crypto FUD, because you know that I love crypto, but there can be truth in fear, uncertainty, and doubt, right? I actually like taking advantage of true FUD, like true fear, true uncertainty, true doubt, because those are the opportunities that I like investing. Now, obviously, the opportunity to buy something like Cardano at $1, we had that opportunity. I sent out alerts like 2 or 3 times when I was at $1 in the Stocks and Psychology and Money group. We talked about it on the channel. We talked about it everywhere. Which if you're not a part of yet, make sure to use the coupon code down below. Take advantage of that 40% off. Price does go up over time, and new lectures coming out this weekend. Anyway, what is a potential set of FUD that could come out with crypto going forward? So on July 18th and 19th, we had FUD over the Grayscale Bitcoin Trust lockups, which led to a surge of sales. And after this surge of sales, we ended up with falling prices. We hit lows around the 19th and 20th. In fact, let's go ahead and go back to those days. Let's go to the day chart. Okay, and let's go jump in over here. Look at that. Here's the 18th on Cardano. Here's the 19th and 20th, right after, like literally the 2 days after the lockup. I even did a video on this channel saying, hey, write down July 18th. It's going to be a big day. This is why you got to subscribe. But anyway, the same was pretty much true of all the coins. This is very, very clearly correlated with the lockups here. Same bottom, 29,295, right, on BTC. So what is a potential leftover catalyst that we have for crypto that's a negative? Like, what is the only thing that I see that's left? So first of all, the DeFi hack did like nothing to our mainstream cryptos, which is great. I mean, you would expect that. You would expect the mainstream cryptos and central fi, CeFi basically, to be totally fine after the DeFi hack. The DeFi hack, hey, we'll see what ends up coming out of that. But what's more interesting to me is the potential for another negative catalyst this year. What is the only one that there could be? Think about it. One of the big reasons folks invest in crypto is as a true inflation hedge. About 40 to 50% of people invest in crypto for that reason. To escape money printing, to escape fiat, to escape government intervention, and to really have a people's currency. Well, what happens if, and potentially, it begs the question as to why we're starting to see a sell down a little bit towards the end of yesterday and today. It makes me wonder, what happens if all of a sudden we start seeing those inflationary figures, and I know we don't all believe in the CPI, but what happens if we start seeing CPI reports coming in showing deflation in used car prices? Oh my gosh, used car prices, instead of being flat, went down -4%. And they offset rent prices going up by, I don't know, 1/3% or less. I mean, last time I think they went, last report they went up just 2.2%. You know, those numbers don't come in. And then all of a sudden we start seeing the August reading, which comes out in September, come in at 4.7% or something like that for inflation. Then the September reading coming out in October comes in at, I don't know, 3.8. And we end up at like 2.9 or 2.5 by November. Think about that for me. Right now, we're at 5 to 5.5% on the CPI readings. And imagine we get to November and the inflation readings are at 2.5%. And the Fed says, hey, you know, we started tapering, because I do expect them to taper, but because we started tapering early and inflation is going down, it looks like our taper is working. Watch them take credit for the taper working. Anyway, it looks like the taper's working. Inflation's going down. And then you know what they'll say? Looks like we might not have to raise rates until 2023 after all. That could be very, very good for some of our tech stocks. Very, very good. If they end up delaying rate increases because inflation comes down at the same time as the taper, that's great. Like at first, a lot of us were fearful of the taper coming. And it makes sense that we would be fearful of the taper coming, because the taper coming is a signal that soon after a taper rates are going to go up. But one Fed board member yesterday spilled the beans. He gave us the juice. He said, here's the thing. If we take the foot off the gas now, we won't have to hit the brakes as soon, because we'll just roll out. That's a really good analogy. Really, really good analogy. I hate to say it, I like it. But just to make that clear, foot off the gas means no more printing money. Hitting the brakes means raising rates. So if you take your foot off the gas now, maybe you don't even need the brake. It'll be interesting to see what that does, or the fear of that does to crypto. No, don't get me wrong. I believe that crypto is going to do very, very well in 2022. But if inflation inflects down, I wonder if there will be a short-term trade opportunity where you sort of get a buy the dip. Anyway, that's just my thesis. It's something that I'm going to be paying attention to. And maybe I'm just saying that because I didn't buy enough during the last dips. I loaded up a few $100,000. I wish I put in more. I didn't. So who knows? Maybe I'm biased because I'm just trying to look for another dip opportunity. But realistically, what else? Right now we don't have a lot of other crypto fear or FUD on the horizon. You've got the North American miners are kicking butt after all the Chinese FUD that we had of them kicking out the miners. So what? This is great for like Hut 8 mining, for example. In fact, if anything, you'd probably want to buy stock in some of these. Now, of course, unless it rotates down more. Because consider this. I mean, look, you've got Riot Blockchain, you've got Marathon, you've got Hut 8 mining. These are some pretty incredible North American miners. But the price of their companies, because they hold so many crypto assets, mostly Bitcoin, at least at Hut 8, is so tied to the value of crypto that if crypto falls, obviously these guys will crash as well. So, but you just have to know that the value of these is almost perfectly correlated to whatever the price of Bitcoin is at the moment. But anyway, these are things to keep an eye on. The one thing that you can do, which is pretty cool, is you can go in and you can actually buy options on something like a Hut 8 mining, which you can't do on Bitcoin. So if you do have that similar trading path, in theory, you could go in here on a red day like today and go YOLO some call options. Now, I generally don't recommend YOLOing call options, but let's say you wanted to buy a call for Hut 8 mining for $5, so it's nicely in the money here. I mean, you're basically paying $7.70. That's too expensive. That's too much for me. I wouldn't do that. Maybe what I would do, though, is I would sell a put. Let me see. Sell a put. I'm not getting a lot of money for doing that. That's not that great. Let's see here. 560 bucks. Let's do a quick look. 560 10 times 5 times 100. 5,000. That gives me about 10%. Let me go out to March. 13. Ooh. 1370 divided by 5 grand. Oh my goodness. Those are nice. Whoa. Whoa. Those are nice right now. Wow. Wait a second. So this would be like buying the stuff, which you might not get it because it could run away from you, right? If crypto runs. But you'd milk a big fat credit here. This would be like buying it for, what is that, $3 and my brain is too slow right now, 63 cents. $3.63. So if you wanted to buy Hut 8 mining right now for $3.63, you could do that by selling puts, but there's a chance you might never get it if it sells over $5 come March 2022. Interesting. So now if I went for, I don't know, I'm just going to go crazy for a second just to see what it looks like. If I bought 1,000, okay, yeah, no, I'm not going to do that. If I bought 250 of those contracts, 250 times 5 times 100. If I bought 250 of those contracts, that would be $125,000 of collateral that I have to put up. And I'd be getting $34,250. That's 27%. That's not bad. That's juicy. You know? If I wanted to commit to something until March, I mean, you could probably do something similar to this to add like SoFi and stuff like that. But if you wanted to backdoor into something like Hut, hey, you know, that's doesn't seem horrible. Not financial advice, of course. But yeah, let's also briefly just look at a Riot play. I don't know. Let's go in here on the Riot, and then we'll get back to some of the more normal sticks here. So see, Riot's only down about 2% today. So I'd rather do it on something that's having more pain. Like here's an interesting one. Okay, let's say you wanted to buy Shift. Just as an example, so you can carry over that crypto example. Let's say you wanted to buy Shift, but you're like, I just want to put my way into it. Okay, fine. So let's go over here, sell a put, 750 for December. Yeah, look at that. You get 1,100 bucks right now. Really? Look at that. 7.5 times 100 times 10 contracts. That's $7,500. And I'd get $1,100. Oh, I'd be getting 14.6%. That's not bad. It's like picking the thing up for $6.40 if it closes below that, right? These are the days to sell puts. On companies you want, though, you'd have to want the company. So if you do want to be in those kind of crypto companies, that's an option for you. But especially if you go out to March, you do run the risk that we end up having a crypto rally that just lasts into 2022. Although I think the inflation fears subsiding are going to be they're like the only negative catalyst right now that I see for crypto. So yeah, for what it's worth, hey, keep that in the back of your mind. But look, I mean, even if you wanted to go into Coinbase, you wanted to sell some puts to backdoor into Coinbase because you wanted to buy some Coinbase, maybe, but realize you might just end up getting the credit and you might never get the shares. Anyway, that's that for the crypto talk. Thanks for watching the crypto talk. Okay, let's keep moving on.